Thank you everybody for joining us today. My name is Sean Moss with Down Payment Resource. We've got a few other team members with us today, but today's goal is to give you the basics about down payment assistance programs, or actually more broadly, homebuyer programs, because down payment assistance is not the only kind of homebuyer help out there. But this is a Down Payment Programs 101 webinar today. We want to give you loan officers and agents the basics about homebuyer assistance programs, break them down, look at commonalities, look at their nuances, look at the differences among down payment assistance programs, but also some of the other most common types of homebuyer programs. So essentially, we're going to break down the three most common types of homebuyer programs, give you the basics, show you how to access this data, talk about some of the nuances and requirements and eligibility criteria for a lot of these programs. And ultimately, our hope is to give you confidence, give you a path to the data, the resources and tools that you need so that you can approach first-time homebuyers, approach new homebuyers that might be in need of or benefit from down payment assistance, and be confident in having conversations about these programs. So we're not trying to make you experts today. That's not the goal, but we want to give you a foundation or a baseline from which you can grow and give you the tools and resources that will help you continue to do so. So again, my name is Sean Moss, Director of Operations with Down Payment Resource. And we also have with us today Fern White, our account manager, and William Medina, who is a DPA program specialist on our research team. And they're going to help me present some of this information to you today. Let me first give you some background about Down Payment Resource. We are essentially a national database and matching engine of all of the roughly 2,200 homeownership programs out there across the country for homebuyers. We have integrated this DPA data, these programs and their information into MLSs and property listing data. We also offer tools to lenders and real estate agents and loan officers that help them expand their reach, educate more buyers, and present down payment solutions to potential home buyers. So ultimately, we are here to help you connect home buyers to the down payment help they need. Now, to get started, I'm going to introduce Fern White, our account manager. She deals a lot with our MLS customers and our lender customers. And Fern, if you want to just kind of tell everybody what we're talking about today and give everyone a background on down payment assistance programs, and then will get us into a breakdown of the three most common among them.
Thanks, Sean, and thanks everyone for joining. So today we're going to discuss loans, grants, tax credits, and other programs that can help eligible buyers achieve the down payment faster, cover their closing costs, and just really get buyers into homes sooner than they would have otherwise. Of all the home buyer programs out there, about 73% are some sort of down payment or closing cost assistance. That's really a catch-all category though, and we'll dig in deeper in a few minutes, but it's really important to know that not all down payment assistance programs are the same. 64% have deferred payments, meaning you don't have a monthly payment on the DPA loan for some period of time. 43% are forgivable, either in part or in full, essentially becoming a grant over time. And 38% are both deferred and forgivable. And then there are still other DPAs that are true grants at closing or are repayable monthly after closing. So we'll break these down further, as well as the affordable first mortgages and tax credits or other mortgage credit certificates in a moment. So it's important to really note that these programs are everywhere. Some markets have more homebuyer programs than others, but there's a state housing finance agency in every state, and their programs are available statewide. So there's literally no county or market in the country where there isn't at least some kind of DPA or other homebuyer assistance. So who funds and administers these programs? So I mentioned that every state has at least one housing finance agency. In addition, city and county governments often have community or economic development departments or housing authorities. There are also a number of nonprofits like NeighborWorks and Neighborhood Housing Services and others who operate in markets across the country with varying programs. Many employers like municipal governments, hospitals, and universities also offer their employees down payment assistance. And then there are community action agencies, there are land trusts, and many other organizations out there that are all trying to open new doors to home ownership and promote housing growth and responsibility in their market, which of course is your market. And they've all got funded and available down payment assistance programs. So there are a number of current DPA trends that we've seen over the course of this year. The most important is that all state housing finance agencies are open and they're accepting reservations. So housing finance agencies had a record year in 2020, which of course continues this year for purchase business. Local programs are still widely available and new programs are being added frequently. Homebuyer education is done online, and currently 81% of all DPAs are funded and available. So DPAs are not going away. It's also important to note that all of these programs share some basic universal requirements. For example, they are only for owner-occupant buyers. These are not for vacation homes or investment properties, although in some markets, the assistance may be available to buyers of 2 to 4 unit properties as long as they will occupy one of the units. They all still require some minimal investment from the buyer to keep a little skin in the game, right? So this can range anywhere from $500 to $1,000 or maybe more, but just remember that these buyers are also investing time in the homebuyer education process as well. So these buyers typically complete a homebuyer education course to qualify for a DPA program. And once they complete their homebuyer education course, they typically receive a certificate that's good for about a year or so. And of course, these are not cash buyers. We're talking about buyers financing their home with the mortgage, so they will need to qualify for a mortgage as well. And now I'm going to turn it over to Will, who will walk you through the most common homebuyer programs.
Thank you, Fern, and welcome everyone. So before we jump into discussing down payment assistance programs, we'd like to hear from everyone. So we've got a quick poll question that has been put up, and we'd like to know what percentage of your business is made up of first-time homebuyers. So please take a moment to select your answer, and we'll review the results and then jump right into our topic.
And Will, bear with me for a moment. We're still getting a lot of people clicking, so I'll share the results here in just a sec. Go ahead and click your answer on the screen, guys. All right, there you go, Will.
Okay, great. Okay, so what I'm seeing here is that, well, across the board, we've all had some level of interaction with first-time home buyers, and I think that's great. And what I will say is, for those who often work with first-time home buyers, or for those who may not work as often or are building up that part of your business, as has been said, we want today's webinar to provide you with some additional resources and tools for your playbook. But today's content is not strictly for first-time home buyers. What we do like to do is gauge the audience, but most importantly, learn from your experiences. So without further ado, the 3 most common types of home buyer assistance programs are the down payment assistance program, the below market rate affordable first mortgage, and mortgage credit certificate. There are variations and certainly many other names for each type of program, and that's what we'll clarify as we learn how each one works. Remember, as we go, no 2 programs are exactly the same, but we're going to illustrate the basics of each type so you can understand at a glance what your options are. So first, let's begin with down payment assistance programs. Down payment assistance programs are by far the most common type of home buyer assistance in most cities. Every state has a housing finance agency, which is the housing division of their state government, and just about all of them have some form of a down payment assistance program, as well as local government and nonprofit program providers who offer down payment assistance. These programs are typically grants or silent seconds that offer down payment assistance of several thousand to tens of thousands of dollars to eligible buyers for down payment help. The infographic we've provided provides 4 examples. The first are grant programs, which are non-repayable gifts. Repayable second mortgage programs, which often carry 0% interest, though some may accrue interest, and they typically range from 5 to 30-year loans. Third, we have deferred or silent second programs, where repayment is postponed until an event occurs, such as the sale of the home or a refinance. And lastly, forgivable second mortgage programs, where some or all of the original amount is forgiven over a certain period of time. Often, down payment assistance programs also allow the funds to be used for closing costs, prepaid expenses such as escrow costs, rehab, or repairs, which can be particularly important with foreclosures or livability standards for disabled buyers, and even loan principal reduction, which is one of the more common uses. All of these uses help the buyer shed the costs of purchasing and financing a new home. Now, one of the most common misconceptions about down payment programs is that buyers must be first-time buyers. In fact, of the nearly 2,000 programs across the country maintained in down payment resource, 38% of them have no first-time homebuyer requirement. And beyond that, most programs adhere to HUD's definition of a first-time homebuyer, which effectively states that you're a first-time homebuyer if you haven't owned a home in the last 3 years, with still more exceptions to the rule for widows, divorcees, displaced homemakers, and other circumstances. But in just about every market across the country, we see programs that waive the first-time homebuyer requirement in targeted areas, make exceptions for veterans or certain professions, or just don't have the requirement at all. While down payment assistance comes in many forms, they all help the buyer reduce the down payment burden, open new doors to homeownership, and pocket a little extra cash upfront and along the way for other homeownership obligations. Many of these programs are grants, meaning they are interest-free, payment-free gifts to buyers who meet the eligibility requirements. Others may bear interest, but defer the payments for the life of the loan until sale, or even better, until the affordability period expires. So for example, many programs stipulate that the buyer occupy the property for a certain number of years, maybe 3, 5, 7, 10 years, and then the lien is forgiven, essentially becoming a grant. For those programs that are not grants, many will take second or third lien position to allow for layering of assistance programs. So what are the eligibility requirements? Most have the following limits. Eligibility can depend on the program and the funding sources. Income and purchase price limits are always market adjusted, often based on calculations for the area median income, the average income of their market. But basically, they all have income limits ranging from 80% all the way up to 140% of area median income, or AMI, and sometimes even higher, which can creep into 6-figure incomes in many cities. They typically have sales price limits too, but those are usually in line with HUD's loan limits in each market, offering assistance at or beyond median home price values. The location of the property is critical, as each program, especially at the city or county level, offers assistance within specific boundaries, such as city or county limits. But remember that the programs from your state housing finance agency offer assistance statewide, covering your entire market. We even have some nationally available programs integrated into down payment resource. Some programs have more needs-based eligibility criteria that involve an evaluation of each buyer's scenario and assistance needs by the program administrator. Most programs will mirror first mortgage requirements, as an example, requiring a 620 FICO score or higher. Home ownership history also makes a big difference. Many programs are only for first-time home buyers, but there are many for repeat buyers or even current owners. Remember, a first-time home buyer is simply someone who hasn't owned a home in the last 3 years. I'll expand on eligibility as it pertains to military service and certain professions in a few moments, but both can open new doors to assistance that may not be available to the general public. Ultimately, these programs reduce the buying cost for a buyer. and expedite their timeline by offering down payment or closing cost help that enables a buyer to reduce their out-of-pocket expenses and retain their liquid savings. As an example, think about someone obtaining FHA financing, which requires 3.5% down. If a DPA program helps them bring more to the table and instead qualify for a conventional loan at 5% down, this effectively lowers the monthly payments and the long-term financing cost. Specifically, an FHA mortgage has expensive upfront mortgage insurance premiums and higher monthly mortgage insurance costs that last the life of the loan, whereas conventional mortgages have no upfront mortgage insurance premium and lower monthly insurance premiums that can be canceled once the buyer gets to 80% loan to value. When you reduce loan to value, you also lower debt to income ratios, which help more buyers qualify and increase their homeownership possibilities. Most importantly, it increases the purchasing power of a buyer's income, allowing them to more readily qualify for the home they like, and in some cases, qualify for a little extra home to suit their family needs. Increased purchase power offers the buyer a competitive advantage. Of course, reducing monthly payments also allows for a little extra cash every month to be placed into savings, which has been shown to improve default rates. Many down payment assistance programs require the buyer complete a home buyer education course, which provides valuable information about the home buying process and resulting responsibilities of homeownership down the road. This better prepares potential buyers for the obligations they face as owners and the steps they'll have to take to get there, ultimately enabling them to be better clients and more adept decision makers for you along the way. More and more down payment providers are offering online education options for their homebuyer courses. Course material is typically in line with HUD certified homebuyer education. Most courses are simply an 8-hour class that can be completed on a Saturday or during a few evenings of online sessions at the consumer's discretion. This allows buyers to work ahead towards down payment assistance pre-approval and hit the market as more competitive and informed shoppers. Most importantly, these buyers are far more likely, according to HUD and the Harvard Joint Center for Housing Studies, to be successful owners down the road. Default rates are significantly lower when homebuyer education is completed before closing. Now I'd like us to take a look at another of the most common homebuyer programs, the Affordable First Mortgage. Affordable First Mortgages are additional mortgage options typically only available through a state or local housing finance agency. The most common benefits you'll see are below market interest rates, reduced mortgage insurance costs, and allowances for higher loan to value, or LTVs. Products like HFA Preferred or HFA Advantage offer reduced mortgage insurance below a standard conventional product, all with higher LTV. You can typically combine these Affordable First Mortgage products with down payment assistance and/or tax credits from those same housing finance agencies. Affordable First Mortgages help further reduce the cost of homeownership for buyers. Lowering monthly payments through lower rates or mortgage insurance pricing helps increase the purchasing power of each buyer and can potentially expedite homeownership for them, getting them into a home sooner than they would have otherwise been able to. Now let's look at the third of the most common homebuyer programs, the Mortgage Credit Certificate. The Mortgage Credit Certificate, or MCC, is available from state and local housing finance agencies in some states. This offers a federal income tax credit of up to $2,000 per year. Eligible buyers must get an MCC prior to closing and then get to use it every year for the life of their mortgage. The MCC tax credit helps offset part of your mortgage interest costs, and you still get to deduct the rest of the mortgage interest you pay each year. MCCs help reduce a buyer's federal income tax liability by offering a credit for mortgage interest paid. Some MCC providers will allow a lender to take the MCC credit amount and annualize that over a year to increase a buyer's qualifying income. And some MCC providers will also reissue an MCC through a future refinance. So let's take a look at an example of how MCCs work. Let's take a $200,000 home. Buyer closes and makes 12 payments in that year. Say they paid 4% interest, so $8,000 in interest in that year. The MCC allows you to claim 25% of that mortgage interest paid as a tax credit, so $2,000 in this example. But the homeowner still gets to claim the rest of the $6,000 of mortgage interest paid as a tax deduction every year. Now, I'd like to wrap up this breakdown of the most common homebuyer programs with a few other scenarios where they may be additional or unique benefits for your clients. There are many programs that offer additional or unique incentives to buyers purchasing in targeted areas, which are areas with higher foreclosure rates, vacancy rates, unemployment rates, or parts of town most in need of community investment. Typically, there will be no first-time homebuyer requirement. The assistance amount is increased, and the income limits and sales price limits are often higher. The idea is to promote homeownership in revitalization areas, particularly so that core service providers and professionals can live where they work. These targeted areas are all over the map, not just in big cities. Targeted areas are usually bounded by specific cities, zip codes, or census tracts, or maybe sometimes entire counties. There are also special programs available in many markets that target certain professions, typically teachers and educators, police officers, firefighters, healthcare workers, and municipal employees. For example, in Georgia, the state funds the Georgia Dream program that offers $7,500 in down payment assistance to eligible buyers. But teachers, police officers, and nurses can get an additional $2,500 for a total of $10,000 in down payment and closing cost assistance. The idea behind these programs is to enable homeownership among local core service providers. And many of these programs have very broad definitions of terms like educator to include not just classroom teachers, but public school system employees at large, like paraprofessionals, librarians, school nurses, or take protectors, could include police officers, sheriff's deputies, corrections and probation officers, and more. Another targeted audience of eligible buyers is our armed forces active duty personnel and veterans. There are so many programs out there that waive the first-time homebuyer requirement for veterans. Some offer higher assistance amounts too. Many of these programs can be used in conjunction with VA loans and ultimately offer our veterans a little more flexibility to become buyers despite homeownership history. Some of these programs offer the same or similar incentives to active military and Guard or Reserves members. For example, the Penn Fed Foundation Dreammakers Grant offers a 2-to-1 down payment match for every dollar contributed by a veteran, active duty service member, guardsman, or reservist up to $5,000. And it's a grant too, so it does not have to be repaid, and it's available nationwide. We've given you a lot of information today, and now I'd like to pass it off to Sean Moss.
Thanks, Will. Thanks, Fern. So I'm going to put another poll up here before we proceed. We've given you a ton of information, but we're going to show you how to access down payment assistance info as well. But first, let's just take another poll here. Tell us, how often do you work with buyers who use down payment assistance? And you can click your answer on the screen there. Is that something that you've never done or never do? Is this something that do you frequently work with buyers who use a down payment assistance program, or maybe you fall somewhere in the middle? Go ahead and click your answer on the screen, and then we'll share the results. And then we're going to get back into, now that we know all this about homebuyer programs, how do we access this information if or as the need or the desire arises? All right, so most of you, it looks like, have answered. So how often are you working with buyers who use down payment assistance? A full 10% of you are working with DPA users or buyers frequently, 21% sometimes, 23% rarely. Almost half of you have never worked with a buyer who's using down payment assistance. So I'll beg the question, why is that? Were you not aware of these programs? Do you not frequently work with first-time home buyers? Are you focused on luxury? Are you focused on commercial? Are you focused on relo? And it's a rhetorical question, but feel free to throw a comment in the chat, or if you have any questions about that, let us know. But this helps us also understand that Again, what we're trying to do today is help you build confidence and understand where the tools are so that you can confidently go talk to potential home buyers about down payment programs, open up the dialogue about down payment solutions, and know where to go if you have questions or need help or need resources. So with that, let's talk about some of the tools and resources that are out there for you. First and foremost, anybody anywhere in the country at any time can go to downpaymentresource.com and you can search for all of the homebuyer programs available in any city, in any county, or even at any address and figure out what's out there for you. We'll tell you how many programs there are. We'll tell you how many dollars you might get from each program. We'll tell you we'll give you information about the program provider, their website, their guidelines, their resources, their participating lenders. So realtors, if you're looking for how to partner up with a loan officer that understands these programs, participates in these programs or offers them and does a good job, then we provide you with links to the program provider's published list of participating lenders. So again, anyone, anywhere, anytime, whether you're a realtor, a loan officer, a home buyer, an education provider, a homeownership counselor, anybody can go to downpaymentresource.com for free and find all of the home buyer programs available in their market or where they want to buy a home or where their client wants to buy a home. And again, it's all free. So anybody can do that. Now, we also integrate this down payment assistance program data into the listing systems for our MLS partners, which you can see on the screen here. If you are a member of any of these MLSs, we have partnered with them to incorporate down payment assistance program information on all eligible active listings. Now, of course, that's residential, right? These programs are not for raw land, farm, commercial, and so forth, but on all active eligible residential listings, you will see a button that looks like this or some variation of this on agent reports. Maybe that's single line, agent detail reports, agent full detail reports. You may have various names depending on your MLS system or platform, but essentially we will show you that the property is eligible by showing this icon if that's applicable. When you click on the down payment button, if you're inside your MLS and you see this, we simply show you right there on the screen which programs are available, the details of those programs, and that's for every active listing. Now, as soon as you list the property that night, with most of your MLSs, we will see any newly added listings or updates, like price changes, by the way, which can affect the eligibility of a listing for down payment programs. So we see all of that nightly. We update nightly with all of our MLS partners. And then as long as that listing is on market, you will see the down payment icon and have access to all of the information about all of the programs that are available for that listing. Now, you don't have to do anything for that to appear. So if you are a member of one of our MLS partners, this is not an input field. You'll see this automatically populate the day after you list the property. And then again, it remains so long as your listing is on market. So you don't have to do anything for that to appear. It's automatic. And if you are a member of one of our MLS partners, you also have Down Payment Connect. The agent version of Down Payment Connect gives you a free personalized lead generation landing page where consumers can come search for down payment assistance programs where they want to buy, whether or not they have a specific property in mind. They might just know what city or more broadly what county they want to purchase a home in, but if they don't have a specific address, they can still search by county, search by city, search by neighborhood. Now, this is a lead generation tool. If you are a member of one of our MLS partners, you already have it for free. You can use it in social media. We have an entire webinar dedicated to Down Payment Connect, in fact, where we show you examples from your peers all over the country and how they use Down Payment Connect in social media, on their websites, in their blogs, in their email marketing, in their email signature. And they use that to raise awareness of the down payment assistance programs that are out there, but also to start conversations with home buyers who maybe thought that homeownership wasn't within reach, or homeownership wasn't for them, or they thought they had to have 20% down, and you showed them down payment programs and they realized, okay, well, maybe there's a path to homeownership for me. So that's by and large the goal of Down Payment Connect, is to help connect home buyers that need help with you, because you know these programs are out there now and you can offer that assistance and start that dialogue. We also have a version for loan officers. And if you are not a member of one of our MLS partners that we listed earlier, we do have a version of Down Payment Connect that you can subscribe to. You can go to downpaymentresource.com/DPC and get your own landing page that consumers can search for down payment programs from, generate your own leads. So it's not a lead buying program. It's a tool that you can incorporate into your marketing to help generate more leads from a new audience or a wider audience of prospective buyers. And essentially, you're engaging with new buyers, enhancing and expanding your marketing reach, and educating them about, first of all, the fact that these programs exist. And in doing so, we're commonly educating these prospective buyers about another misperception that they suffer from, which is that they think they have to have 20% down to buy a home. So all of this helps you tap into new or growth markets, and it can be used creatively across all of your digital marketing. And again, we have an entire webinar dedicated to the creative and fun and exciting uses of Down Payment Connect. We'll send you the registration as a follow-up to the next scheduled Down Payment Connect webinar. Now, we also have a Down Payment Insiders Facebook group. So again, we're showing you where to go to get resources to help you continue these conversations, to help you continue your research, to help you further build your foundation or your knowledge of down payment assistance programs. So you can always go to downpaymentresource.com. You can certainly use Down Payment Connect, and you already have it for free if you're a member of one of our MLS partners. But we would also encourage you to join our Down Payment Insiders group on Facebook. This is a group of about, right now, 8,000 realtors and loan officers, mostly around the country, that are sharing best practices, challenges, obstacles, lessons learned, exciting opportunities, and so forth with regard to first-time home buyers, down payment assistance programs, DPA providers, working with them, how agents and loan officers have partnered up on training and education and outreach and marketing, and quite frankly, just operationalizing down payment programs, getting them pre-qualified, getting buyers in the door, getting them out looking for homes, contracting and closing with down payment assistance programs. So we encourage you to join the Down Payment Insiders. You can see the group URL here on Facebook at the bottom of the slide, but you don't have to engage necessarily if you just want to listen in. You know, we put content and questions out there, and we try to keep it thought-provoking and interactive. If you just want to listen in and watch and learn and see what your peers are doing around the country, that's fine too. But we also have a lot of people in that group that engage in creative brainstorm, that throw out their success stories, ideas that worked for them in their market that others can adapt or others can adopt. So again, we encourage you to join the Down Payment Insiders. That's a great place to listen and learn, and to supplement the down payment assistance program data that you can get from our website at downpaymentresource.com, or through your MLS if they are one of our partners, or through Down Payment Connect as you're trying to reach out to consumers and expand your marketing reach. I'll leave you with this before we get into Q&A, and I can see we've got a lot of questions piling up here. So we'll come back to Fern here in a moment and we'll get into questions, but we'll leave you with an agent case study. Amber is a realtor in Florida. She's a member of Stellar MLS. When she got into the real estate business, she found that her peers had questions and there was a knowledge gap when it came to down payment requirements. So she started addressing that knowledge gap and building her pipeline of first-time home buyers from amongst her peers by educating them not just about down payment requirements, but also about down payment solutions, specifically down payment assistance programs and the other types of programs we've been talking about here today. She now uses Down Payment Connect to help build her business and educate more buyers. She includes a link to that down payment search experience in her email signature along with her photo. She promotes Down Payment Connect and the opportunity to search for down payment assistance to new clients, new relationships, new prospects at open house events. She uses it on her Instagram profile and in social media posts. So she's putting it out there with other content and essentially offering not just education, but a path to down payment solutions by enabling consumers to search for programs that might be available to them. And she also highlights listings that are eligible for down payment assistance. So when a prospect is looking for new homes, she's promoting the availability of down payment assistance on the homes that buyer is interested in. So hopefully that gives you a few ideas of what just one creative agent has done to build her pipeline from among her peers of first-time home buyers who are using down payment assistance programs. So with that, we know there will be questions after the webinar. We're going to get into all the ones we can right now. But if you have questions afterwards, please email us at info@downpaymentresource.com. And with that, Fern, can you kind of guide us here? What kind of questions and comments are we getting and what can we address?
Sure, Sean. Thanks a lot. And thanks, everyone. Great questions coming over this afternoon. I just wanted to remind everyone that the recording will be sent, as Sean mentioned earlier, either later today or sometime tomorrow and possibly maybe Monday, first thing Monday. There's some additional information, slides that a lot of you are asking for. So we'll need some time to put that together so that we can share that with you. So just look out for that information that'll be forthcoming. Again, lots of great questions. Sean, one question that came over in the chat, and that was, are duplexes eligible? I just want to remind everyone that yes, depending on the market, 2 to 4 units are eligible. But just remember that the buyer must occupy one of those units. So again, depending on the market, 2 to 4 units are eligible, but the buyer must occupy one of those units. There was another question that came over in the chat, and that question was, are there any incentives for brokers? Sean, do you want to answer that question?
Yeah, sure. So I'm gonna guess at what the question actually is, but if I guess incorrectly, then whoever asked it, please clarify in the chat. I will say that for brokers, there are, if you are a member of one of our MLS partners, and in fact, I'm going to put that list back on the screen here, but if you're a member of one of our MLS partners, then there are some incentives to get your agents growing their pipeline, to get new agents started, to get agents new to the industry started. So there are things we can do with your IDX website to flag eligible listings. If you've got if your brokerage has a property search website, we can absolutely work with you and your IDX vendor to flag those same eligible listings like we do inside the MLS. That's a tertiary benefit we didn't really get to today, but that's certainly a possibility. As far as Down Payment Connect goes, Down Payment Connect is a great tool, especially if you're a member of one of our MLSs, or even if they're subscribing to it. But if you're a member of any of these MLSs, then you and all of your agents have access to Down Payment Connect for free. That's just part of our relationship with your MLS. Getting your agents using that tool, especially if they're working more or intend, or you expect them to work more with first-time home buyers, getting Down Payment Connect out there and having them use that is a great way to educate a prospect base, educate more potential buyers, and bring renters into the purchase pipeline by letting them know that these programs are out there and that you don't have to have 20%, and that you and your agents can help uncover those solutions. So I'd say that's probably the biggest incentive for brokers to adopt down payment assistance more broadly, but our tools in particular, because it's a way for new agents, new to the industry agents, younger agents focused on their peers, working with first-time home buyers. It's a great way for them to get started in the business, get creative in their marketing, social media, email, wherever, and reach and attract the attention of more buyers. And we actually have some broker resources we can send out. So Fern, let's make a note to send that after the webinar too for brokers. But hopefully that at least starts to answer the question.
Great.
So Fern, what else?
Thanks, Sean. And just to add to that, there are a couple of questions that have come over asking how does an agent find the listings that are eligible for down payment assistance?
So some of your MLSs will have a filter, like a down payment resource eligible filter in your search, your MLS or listing search platform. However, essentially, when you're on the agent reports, whether it's agent single line, if it's the agent full detail, you've all got different MLS systems, but essentially those reports or something synonymous with them, look for this button that's on the screen. That's how we flag or identify properties that are eligible for down payment assistance. And then when you see this, it will be a button, so you can click it and we will show you then on the screen all of the programs available, excuse me, for that property. So whether or not there's a filter on your listing search, you can still look at these buttons on the actual listings themselves as you go through a list, for example. Now, if you're in the single line, maybe scroll left, right, look for the button. Maybe in a column that's off to the right and you have to scroll to it. Every MLS system is different, but long story short, you're looking for this. And I should mention and clarify, your clients see this as well through the client portal. So, and to the tune of tens of thousands of home buyers per month, clients are seeing these just through our partner MLSs in the client portal. They're seeing that eligible listings have down payment assistance programs available, and they're clicking on, engaging with, and learning about down payment assistance. So if you get calls from prospective buyers and they say, hey, I got a listing from you and I saw there's down payment help, that's why. That's how it happened.
Great, thanks, Sean. Another question that has come up a couple of times is, I think there's some confusion about Down Payment Resource, the company, and Down Payment Connect.
Yeah, so Down Payment Resource is the name of our company, and we offer a number of tools. We work with lenders as well. We integrate with MLSs, but Down Payment Connect is the name of a specific product that we offer. And again, the company is Down Payment Resource. One of the tools we offer to both real estate agents and loan officers is called Down Payment Connect, which is for the individual agent or loan officer, a down payment search page where the consumer can come find down payment help where they want to buy. They're not going to get all the program details and information. They're going to connect with you first, hence the name of the product. And you'll have, where they were searching, what price they were looking at, the programs they found, their contact information. That sends all of that to you in the lead once the consumer does a search on your page. But essentially, Down Payment Connect is named so because it offers the consumer a path to find out that there's down payment help out there and connect with you to learn more and take the next step.
Great, thanks, Sean. I'm going to turn it over to Will. There were a couple of questions that I had wanted to answer live.
Thanks, Fern. Yes. So the following is, it's my understanding that each property qualifies for different programs. Does the buyer look first for the house or look up programs?
Great question. You're absolutely right. Every property is going to have a different list. Now, geography is the biggest factor there, and price. Those two factors account for most of the variation. So a state program is going to be available statewide. A county program may be available countywide. A city program is going to be available within its city limits. There may be nonprofits or local housing finance agencies that whose programs are available regionally, maybe multi-city, multi-county. So the thing about geography and the thing about listings, being eligible for different programs is that if you've got two different properties in the same county, but they're in different cities, then those cities may have different DPAs. One may have one may not. So that part of the list is going to differ, but then they both may still be eligible for the county and the state programs. So that's how geography makes a difference. If you cross municipal boundaries, you are likely to see more or fewer, or at least a different list of programs, depending on where in your market you are and what's available. And then price can change the nature of a listing's eligibility because Many of these programs have maximum purchase price limits. Will talked about that earlier. If you are listing a property at a list price that's higher than the maximum purchase price allowed by a particular program, we won't show that program, because if the property were purchased at its list price, the buyer wouldn't be eligible for the program because the property is too expensive. And that's why we also look every night, not just at new listings, but especially in a market like right now, price changes. If list price goes up or if list price goes down, that can increase or decrease the number and the type of programs that are available. So yes, each property can be eligible for a different set of programs. Geography and price drive that. And Will, I'm sorry, was there a second part of that question?
I believe you answered it. Not sure if the individual is still here, but we're looking at the chat. So if there's anything else, please feel free to answer it, and we can follow up here. There are two that were similar regarding how quickly assistance is received. Someone said, how quickly is assistance received? Asking or applying is one thing, but how quickly can a request be filled?
Good question. And that reminded me of the second half of the last question. Definitely shop for your loan and your down payment solution first. That was the other part of that last question. And to that point here, with this new question, the timeline depends on a couple of things. Most lenders will tell you that most lenders that do down payment assistance programs frequently and well, they will tell you that they're going to close in the same amount of time as anything else with most down payment programs, especially like the state programs. They're not going to slow down a transaction. And we hear that time and time again. And yes, very recently, even given current market dynamics, bidding wars, price escalations, and limited inventory, we still hear that, because the loan officers that know how to do these programs, they have a relationship with the program provider. They understand the program requirements. They have a team that includes a processor, an underwriter, and others that also understand the program, and they're able to do them well and do them in a standard time frame. So no, a down payment assistance program, just because it's a DPA, is not in itself a reason that the transaction will be delayed. Now, we often see that other things happen, like title wasn't done on time, appraisal issues, other things can happen, and often the DPA is blamed because there was a DPA involved. And that's not always necessarily the case or even fair. But it's also important to answer, I think, the crux of that question. When you're looking at pre-qualification up front, when your client is getting pre-qualified with a loan officer, that's the time to be looking at cash to close, to be looking at how much they have in liquid assets, how much of a down payment do they have. If they're not quite where they need to be, then that's where you say, okay, what's the solution then? Are we going to wait? Are we going to prolong this transaction that could otherwise happen with a DPA because we want them to wait and save or go find a gift from a family member or something like that may take time? That in itself is a delay. However, if you apply a down payment assistance program and the loan officer works with that program and knows what they're doing, the pre-qualification process or timeline really shouldn't change. If they need an hour or two or a day or two to collect documents and your loan officer gets everything and lines it up and figures out the down payment program, that shouldn't change the timeline. The things that change the timeline are when that work is not done up front to identify cash on hand and cash needed for closing, not just for the down payment, but the closing costs and other fees as well. If that's not done up front, it can become a problem down the road. And that's where you see delays, is when, okay, we got under contract, we had a pre-qual, but now they're short on cash to close. Now you've got to solve that problem, right? And that's a scenario where the proactive work of identifying and applying for a down payment program could and should have been done further up front, but wasn't. And so now it's a problem and a delay down the road. So I hope that answers the question, but please clarify in the chat if you need more clarity. So Will, Fern, what else?
There's a question here with respect to services for realtors. Are your services free for realtors?
If you are a member of one of these MLS partners on the screen now, then yes, all of the DPA data integrated into listings, the Down Payment Connect tool that is all part of our partnership with your MLS and thus free to you, broker or realtor member. If you are not a member of one of those MLSs, then we do have Down Payment Connect for agents and loan officers, which you can learn more about at downpaymentresource.com/DPC at the bottom of this page.
Great. There's another question in here, and I'm trying to scroll through. There are quite a few that are still open. We'll try to get to as many of these as we can. This question states, can first-time homeowners who can afford 20% of the property value apply for these programs?
Potentially. And real quick, Fern, I'm sorry, I want to add one more piece to the last question. Anybody can go to downpaymentresource.com at any time for free and find programs anywhere in the country. What we do with MLSs, what we do for lenders, what we do with Down Payment Connect supplements that and injects more marketing reach and educational content into your marketing. But you can always go to downpaymentresource.com. That's free for anybody, anywhere, anytime. So I'm sorry, Fern, can you repeat the question?
Yeah, so the question is asking if a homeowner or home buyer can afford 20% of the property value, can they apply for these programs?
Potentially. Some agencies have, when we say agency, the government or quasi-government or nonprofit entity that offers a particular down payment assistance program, many of them, I don't know about many, but certainly plenty of them have what's called an asset test or an asset cap. So essentially that means there's a cap on the amount of liquid assets that applicant or buyer can have before they're either disqualified from the program or would have to use some portion of those assets beyond the cap toward their down payment. So, and then of course you also have to income qualify and be purchasing a price that's at or below the maximum purchase price limit. So, if they just inherited money, that's one thing. They might have to use some of it to put down toward the transaction. If they're high earners and have saved up a lot, then they have to income qualify. So there's a lot of different ways that could play out, but there are some programs that do have an asset cap, and they're looking at liquid assets typically. So, if you've got money in a 401k or IRA, they're not going to ask you to take that money out. But if, an applicant has, $50,000 in a money market account or a checking account or savings account, then the agency might want them to put some of that towards the down payment. And then maybe they would still qualify for the down payment program. So it depends on the scenario. And for a lot of these questions, talk to your loan officer. In fact, we have loan officers on here. Chime in. If you've got advice as a loan officer for some of these questions, we want to share that, because what I'm sharing are the answers we commonly hear from loan officers who do these programs well and do them frequently. But for realtors, we show you when you do a search on downpaymentresource.com, or if you're using our tools through your MLS, or if you're using Down Payment Connect, either the free version or if you subscribe because you're outside of our MLS partners, then we give you links to the participating lenders for each of these programs so you can find one. But those lenders that participate frequently and do these programs well, they also know the answers to all of these questions and can help you with especially some of these one-off scenario kind of things. So definitely leverage the lenders that participate too. And again, lenders, if you're on and listening, chime in, let us know what your answer would be to any of these questions, and we're happy to share that.
Great, Sean. There's there are lots of great questions in the chat as well as in the Q&A panel. This one is regarding retaining potential buyers. So the question is, if an agent tells their clients to go to downpaymentresource.com and complete the form, she's wanting to know, how do you retain that buyer?
How does the agent themselves retain that buyer?
Yes.
I would say just as you would in any other scenario, remain in contact with them. We're not taking your buyer and sending them anywhere else. I mean, they can ask for help from the DPA provider from our site. Now, if, inside your MLS, there is no access to other resources for your buyers, except maybe the provider of the program. I would just do the basics, maintain contact with them and connect them with your lender partners, get them pre-qualified, and, keep yourself in a central position of value-added authority, I suppose. And apologies if I'm glossing over the crux of the question, but I think I'm addressing it.
Thanks, Sean. Yeah, no, I think you answered that correctly. There's another question in here about finding loan officers to partner with. What's the best way for agents to do that?
Couple of ways. Do a search on downpaymentresource.com. Find some programs in your area. Click on the details of any program. Look at the list of participating lenders. That's your candidate pool. Talk to your existing loan officer partners. See which programs they offer. Maybe the topic hadn't come up. A lot of you said that you'd not worked with a client yet that had used the down payment assistance program. So, and that was almost half of our audience. So for many of you, it might just be that that topic has not come up with your loan officer partners. I would bring it up. Ask them which programs they offer, which ones they know well. How recently have they done a DPA program? Do they teach any first-time home buyer classes or anything like that? So that's another path. I would also highly recommend going to the DPA providers themselves. Your state housing finance agency in almost every state publishes a list of their participating lenders, and increasingly, many of them are publishing a separate list of their top producing loan officers. Those are the LOs that do the most business with those DPA providers and clearly do it well, clearly know what they're doing, and want that business. They want that purchase business. They want that first-time home buyer business, and they're highly likely to want your business, a relationship with you. So there's 3 different ways. And then, of course, if you're using Down Payment Connect, when you get a lead from Down Payment Connect, we also show you in the details of the programs that your client found. We also show you links to participating lender information for those programs there as well. Just to be conscious of everyone's time, let's take maybe 2 or 3 more questions. I'm going to put our contact information up here. We know that we're not going to be able to get to all these questions. They are still coming in fast, and we still have a huge audience. So I'm going to put our contact info up here, info@downpaymentresource.com. And maybe Fern 1, Will 1, is there anything that you see that's kind of a trend that or something that we probably want to address before we get off here? Fern, what are you seeing?
Just scrolling through. Okay, so this last one that just came through, Judith mentions that she's worked with 3 different originators that deter, I guess, the buyer from using DPA. And she mentioned that one that she did find never got back to the clients in a timely manner. Do you have any thoughts about lenders and their views on DPAs?
Yeah, and Judith, that's a good question. Loan officers, chime in. I mean, this is your chance at business right here. But I would tell you this, Judith. I'm going to go back to the answer to a previous question. Go to your state housing finance agency website or call them and ask them who their top producing loan officers are. Those people are doing housing finance agency purchase business with down payment assistance programs, and obviously working with the realtors who bring those clients in the door. I would contact someone like that and build a relationship with them. And, I would also ask you rhetorically, but, food for thought, for those originators that deter people from DPA, are they still getting the deal done for you, or are they just not wanting to do DPA? And so you don't even get that transaction. And if that's the case, if DPA is the only thing preventing a buyer, if cash to close is the only thing preventing a buyer from getting a mortgage, there's a solution. If you've got credit issues, you got to go fix that. If there's a property issue, you got to find a new property or, pay more or whatever. But if down payment is the only issue, there are solutions. We just need the loan officer, realtor partnerships in place to resolve that issue. I've seen a couple questions here about, does anybody else get my leads with Down Payment Connect? No. If you use or subscribe to Down Payment Connect, those leads are yours and only yours. No lead carousel. It's not a lead buying program. Nobody else gets them. Will, anything else you want to address here? And then we'll wrap this up and be conscious of everyone's time.
No, I think you hit the nail on the head there. There were a few questions about leads and what happens to them.
Okay. And guys, if you want to learn more about Down Payment Connect, I left our contact information up here, but I'll also point you to downpaymentresource.com/DPC. There's a video there. There's a product feature grid. You can learn a lot more. I know there were some questions lingering about that tool. If you are a member of one of our MLS partners, you already have Down Payment Connect, as well as down payment assistance data integrated into your listing system, which you can find on eligible listings. So again, if you have further questions, reach out to us at info@downpaymentresource.com. Otherwise, thank you all for joining today. We had a huge crowd. We know there were a ton of questions. We appreciate it. Ask away at info@downpaymentresource.com, and we'll get back to you there. Have a great day, and go start talking about DPAs and let us know how we can help. Thank you all.